May profits be upon you. Welcome to another weekly market forecast. In this video, we're going to go over the S&P, the NASDAQ, the Dow, crude oil, gold, silver, platinum, and copper. We're going over the futures. The futures, all right? We're looking into the future. That's what we're doing. But we're going over the futures contract, so that's important to put out, all right? For those that are trading CFDs and trading FX brokered assets. I just created a video today, put it out on my other channel, and you'll just follow where I'm at, and you'll know where to go get it. Okay. But today, right now, we're going over the FX markets. Now, the economic calendar isn't much to look at. We have a couple of Monday and Wednesday are going to be low volume days, bank holidays and all, but those are going to be low volume days. Thursday and Friday are going to be pretty good because there's some good liquidity being injected into the markets with U.S. markets. We have GDP and unemployment numbers coming out, and that's on Thursday, and on Friday we have core PCE, and that is the Fed's preferred way to gauge the rate of inflation, and that'll help them to make better informed decisions when it comes to our interest rates, whether they're going to cut them or raise them. Probably not going to raise them, but cutting them, they may hold off on that, and that's going to have a big impact on the markets. Now, let's look at the S&P futures. Okay, right now on the weekly, this is a weekly time frame. You can see last week closed very bearishly, and that's a bearish close. But we can't get too excited about it, like happy or sad. You might go, "Uh-oh, that's a pretty nasty fall, and there's billions in that candle. Trust me." All right. That's a big institutional size candle there. All right. But we've seen this kind of drop before. All right. Look at this. Look at that. That was a move that you thought would see some follow through. There was no follow through. It just turned around like a quick turn. That's what that is. All right. If we there was another one I thought I saw similar to that. I'm just saying that don't work yourself up about these kind of things. When you see price, this one in particular, you see how price went down, took out on the next candle, took out the high of the previous candle, and close below that same candle's low. Right? You would expect some follow through. That's not what happened. Turned around, pulled up, and and then moving sideways since, but incrementally moving higher. So we can get a turnaround here as well. Let's go to the daily, and what we can see is that nasty drop on Friday. All right, coming down to an area that seems to me would be ideal for a liquidity grab. All right. It doesn't necessarily have to do it like I just showed you in the other drops. It doesn't necessarily have to take that liquidity grab. All right, because where was it? It ignored it here. It ignored it here. It did not take that liquidity grab. Where is it at? Doggone it, man. Making me look bad up here. All right, there you go. See, it's very close, but it didn't take it. Doesn't have to take it here either. So that's something to bear in mind. Oh my goodness, what is that? But we're going to watch for it because it's so close, and the market likes to move towards the nearby liquidity, and this is an external move here. All right, what could happen? What am I looking for? All right, what is the bias here? We're moving sideways, hard to decide. So Monday and Tuesday, it's going to give us some clues. We're going to get a candle closure. And you can see that there's a lot of space here for a bearish fair value gap to form. All right, Monday's candle could give us that fair value gap, and price could very well move up and then down into that, using that bearish fair value gap to go to make lower prices. All right, doesn't necessarily have to do that. I was expecting to see that arrow there from last week. I was expecting price to hit this bearish fair value gap and move higher. It did. It most certainly did. Boom. Oh, doggone it. Right here. It touched it up, pushed higher, and then went Thursday and then Friday, it took a nosedive. But don't act like it didn't. My forecast didn't happen. It did take out our liquidity highs, our liquidity targets, and it went higher from there. That forecast played out perfectly. All right, Thursday and Friday, just it took a nosedive. Do I expect price to return back up to these highs? I don't know. I don't know. But what you want to do is, what I would like to see is a sweep of low sell side liquidity first, and then a move up. That's what I would like to see. I would like to see uh, the lows get taken out, maybe this one as well, and then price moving up. I'm not interested in taking sells until price breaks this low. All right. These lows are fine. All right. Price can take those lows out. But uh, I'm looking for two uh, market structure shifts. All right. I'm looking for two market structure shifts, up and then up. Once it pulls back, that's the one I want to take for a buy. All right. But if price pulls up and then crashes down, that's one. And if it pulls back up after that, that's two. That's when I'll be interested in looking at prices to the downside, particularly if it takes out that low. All right. I'm not, just, I want you to take a close, a fanned out view of this market. And you can see the buy, the, the uptrend is not broken. It won't be broken until we get past here. That's when it's broken. That's when you have a show enough market structure break. All right, and then we can seek a lower, what do you call it? A longer bearish run. But I'm not. I don't want to take shorts in the indices because they normally go up. We can see the same thing for the NASDAQ. Uh, you see the break here. We were expecting higher prices to happen here. Did not happen on the NASDAQ. The NASDAQ was weaker than the S&P. It ran through that fair value gap on the daily, and that fair value gap could invert and turn bearish. I don't trade inversions. All right. It could turn bearish, but I'm looking for price to break above and continue higher. Again, I'm not interested in taking shorts in this market. We break this low here. That's when I become, a little more interested in the market overall. Sorry, I don't know what's going on with this thing today, but we break that low. Things are going to, then that exposes these lows, particularly this one. So right now, once we trade through that low, I should be more specific. Once it trades through this low, um, I mean, closes below it. That's when the lower lows are going to be targets. All right, but this is the one I got my eye on. As far as I don't want to see price go past that low. I do not. All right, so I'm looking for price to turn around either here or after it takes an external low, and then we can look for price can look for an internal target, external to internal target. This is external. Internal targets are going to be your fair value gaps and your order blocks. All right, and as we look quickly on the Dow, You can see price push down, pulled up, another push down. I like this buy to sell. All right. And then once price breaks this high, we come back to it here. All right. This is where I'm expecting price to turn around. Okay. So you see, I have it boxed out here. This is a an area of demand inside of this fair value area, this area of fair value, all right, where sellers and buyers all were able to participate. When price goes away from those areas and comes back to them, they usually act as areas of support. And it just so happens that the 50% of this trading range crosses the same area. Come on, man, you're driving me crazy. Crosses the same area. So I can very well see price turning around here suddenly, like it has done before. But I would be looking for uh, prices to hit a doggone. Look at the time. Hit this area of fair value, this fair value gap. Excuse me, and uh, enter into this more refined area of fair value. All right, so we'll see how it goes. All right, if price comes below this low, I'm looking for, because that's below the equilibrium, the 50% of this trading range, which extends from here to here. All right, this is the middle. I'm looking for price to find support here. Sorry, I didn't mean to do that. Find support here and then turn around. I don't want to short the indices. Oil, uh, oil is looking crazy, because it's, you can see that's kind of indecisive. Yeah, this trading range, it's come back below the 50%. So we should be looking for longs at some point, or looking out for long setups. The deal is that price took this high here and pulled back, and I'm looking for price to continue down. That's what I am. I'm expecting lower prices, especially with Trump and Putin talking and looking to allow Putin to put the oil back onto the market, which would lower prices globally. So, in a global sense, all right, and the amount of what do you call it, momentum in that candle tells me that these low side targets. This is the one I was looking for last week. We hit that, yay! All right, and this is a low hanging fruit here. All right, but I do believe, because of the proximity, that we will be sweeping that low, and we'll probably enter into this area of fair value here. And I'm looking to see if price starts to find support there, and we'll see what it does once it does that. All right, but in on oil, you see there's a lot of space here for price to find a fair value gap to create after Monday. All right, with a Monday close, and price could very well continue into the pull back up into that, and then continue down further into this area of fair value. So that's what I'm looking for. I'm bearish on oil. If we look at gold, um, gold has been bullish. It continues to be bullish, and the bullish trend, as you can obviously, come on, man, as you can obviously see, is still intact. All right. So what are we looking at right now? Uh, uh, you see the push down, and then the sudden and very sharp turn to the upside. I'm looking for price to continue in that. All right. Why are we moving sideways for the last couple of days of last week? Let's take a look in the 4 hour. What you can see is that there was an area of fair value here, the push down, and then the move to the upside where we took that high. Price flows back into it, and we are moving sideways. So what am I looking at right now is price moving into this area of demand, if I can get to it. All right, this area of demand that price had a nice push to the upside on, if I can find it. All right. And we had a nice move to the upside. 1, 2, 3, a nice buy up. We had a retracement to the demand zone, and I'm looking for price to find support here for higher prices. That's what I'm looking for. If price breaks that low, that invalidates my setup, and that would expose this low. All right, I'm looking for price to hit this as a buy side liquidity target, and if we can get up here next week here for an all-time high. Yeah, that's what I'm looking for. All right, if we look at silver, not too much different insofar as my bias. Now, silver's been weaker. You can see how it kind of followed the S&P with a sharp move to the downside up top here, but it's been overall bullish, and I do believe it is going higher. Prices pulled back into this area of demand here. All right, and I want to see if price can find support at the midpoint of this demand zone and continue up higher from there. That's what I'm looking for. All right, should price take out this low, because there's relative equal lows right there. Not something I like to see, but there is a lower fair value gap. I mean, a demand zone here, which is also sitting on top of relative equal lows. All right. So what price can end up doing with these two demand zones is find support on both, either one. Sorry, I didn't mean to say both. If I can get to it, there it is. All right. I'm looking for price to move up from here, right? Or come down, stop it, or come down to here. Use the take out the relative equal lows there. Sorry, and then continue high. All right, these lows can be used for inducement, so that would be a nice liquidity point to aim at if we're going to see some follow through from last week, right? And that is a very plausible situation for me, as far as I can see. If I can find what I was looking for, there you go. All right, so this will be my first. This I don't want to see it hit that low, but if it does, great. This is a higher probability trade from the upside to the upside. Okay, if we look at platinum, I got enough time. Um, it's ranging right now. It's ranging in a big range here. All right, but price has pulled back into a demand zone. I'm looking for price to find support here. I'm looking for price to find support here and turn up to the upside. I do. All right. I think there's upside in the future. And if we look at copper, copper is trading into the same situation. There's a demand zone here. All right. And we're just above it. I'm looking for price to find support in this demand zone and continue higher from here. The deal with this one is that this trading range is finding this is the area right below the 50% of that trading range. So I definitely looking for price to come into that area of discount and move higher from there. Does that make sense? I hope it does. All right. So if we go, if we move ahead this week, once we move ahead this week, I should point out that on the S&P, there's this low range liquidity run right above these highs. Now we hit those highs already. So, in my recap right now, I'm just letting you know that this will be the drawn liquidity up here, okay, for the S&P. Be careful trading this week. Thank you for watching my video and staying till the end, and I will see you in the next one.